What's up, everybody? Welcome to Heresy Financial. My name is Joe Brown, and today, just a little short video here to highlight the importance of something that I've talked about a lot on this channel, which is hedging. Now, if you've followed me, you know my price projections, my price targets. Just recently came out with those, and I'm looking at a 3,800 upside. 3,800 is my target for the S&P 500, 2,500 for gold. I wanted to kind of talk through something with you guys today about re-examining and continually testing beliefs. And so just given what's going on in the world right now, given what's going on in the markets with the economy, nothing is certain. Even if you completely understand how economy is and money and the monetary policy, fiscal policy, and investing and trading, even if you have a better understanding of all that than everybody in the entire world, there's still a chance that you're wrong. And so today we're going to be looking at, again, the importance of hedging, like I've talked about on this channel before, and kind of looking at just given what happened today and yesterday in the markets, really highlights why that's important and can help out with your performance long term and help out with some of those sleepless nights. Let's dive in. All right, guys, so early on in the trading day today, it looked like the markets were going to continue their sell-off. Everything was down a lot more, and even the S&P 500, I was watching it, and it was looking like it was going to break through some key levels of support, that 3380 mark, which was the prior all-time high for the S&P 500. That was it's pretty close to the upward facing trend line that the S&P 500 has been in this channel since the March lows, and it looked like it was going to be breaking through both of those. But then everything kind of turned around, and now markets have rallied. The Dow is positive on the day, at least it was 10 seconds ago, and now it's back down. And so you never know exactly what's going to happen in the markets. You never know when a shock is going to hit. You never know when things are going to sell off. You never know when things are going to spike. It's said that bulls climb a wall of worry, right? And so you never know exactly when or how things are going to play out. Warren Buffett is one of he's obviously he's famous for his lifetime of quotes and wisdom on investing in. One of the things that he says that is one of my favorites is that diversification is a hedge against ignorance. It makes no sense for somebody who knows what they're doing. But let's be honest, in some area, everybody has no idea what they're doing. And so I'm a huge fan of, hedging my bets and making sure that, I'm exposing myself to as many alternative views of what is going to happen as possible, as much as possible, while, trying to keep an open mind, consider alternatives. What if I'm wrong? Because if I'm wrong and, let's say neo-Keynesians are right, and redistribution of wealth and socialistic controls and nationalization of industries and businesses is something that causes growth, and modern monetary theory, MMT, is correct, and universal basic income is something that's going to launch us into a period of prosperity. And some of the things that we're starting to see right now unfold: helicopter money printing, and nationalization of the credit markets. These are all things that are good for the economy. And gold is a barbarous relic, and it's going to zero. Let's say those things are all true, and everything that I've thought was true is completely hogwash. Well, I want to make sure that I'm not wiped out, right? Because I'd rather be profitable than right. That's Robert Kiyosaki. I'd rather make sure that no matter what happens, I'm not going to get wiped out. My profit and loss statement is more important to me than my ego, right? So we talked about tail hedging. I'll link that video in the description below. It's imperative to do stuff like this because, number one, it helps out with the sleepless nights. If I think the market's going to go up, and then so I throw all my money into SPY, and then it tanks the next day, well, I lost a ton of money. And so I want to make sure that, I'm hedged against stuff like that. And I like the tail hedging strategy simply because it doesn't require a lot of capital to I'm not doing like a 1-for-1 hedging strategy where I'm buying, one put for every 100 shares at the money. That's expensive. So a tail hedging strategy, maybe I find a put with a delta of 0.1 and I buy 10 of them, that way, you know, I've got a dollar for dollar move, you know, for the initial moves, and due to gamma, my delta jumps up. And so if the market really starts to tank in a tail event, you know, a massive, you know, black swan type of crash, well, then I'm hedged against that. And now I'm not only just covering myself, I'm actually making money on the downside as well. And so making sure that you know, even if I'm wrong about what is going to happen, that I'm covered, and I'm not going to get wiped out from that. And so something that you know, right now, where we saw, you know, the market has been being pushed up, and a lot of us know, a lot of us have been looking into this and hearing people talk about, you know, here there's, you know, there's manipulation and it's money printing, and that might be true. I'm not saying that any of this is good, but if you know the rules of the game, then you can get ahead. If you know how to play the game, you can get on the right side of the fence. And so it's important to continually, for me, to be exposing myself to what, you know, everybody says is going on, to try and filter out the noise and see the signal. And so that's what I'm trying to do here. That's what I'm trying to do on this channel for you. And so if you haven't watched that tail hedging video, I would highly encourage you to go watch that. Again, I'll link it in the description below. And one other thing that I want to talk about is on a related note, which is something that's been driving the market. In my video on delta hedging, which you can watch, I'll link that as well. And then in my last video about why the market tanked yesterday, I talked about how call buying has been pushing the market up. And there have been some other sources that have talked about this, nothing mainstream, but you know, I'm not the only one to talk about this, that you know, a massive amount of money coming in to buy calls actually drives the share price higher, because the people on the other side of that have to hedge their bets. And if you're buying a call, I'm selling that call to you. The way I have to hedge my bet, if I want to stay neutral, is to buy shares, because I'm short a call, so buying shares, now I'm neutral. And so that's been driving it up. What just recently kind of started coming out is that most call buying in a lot of these stocks was from one company. It was SoftBank. And SoftBank has been notorious in the last few years for some terrible investments, and you know, they were behind WeWork as well, which you know, we all know how that went down. And so it's kind of interesting that this, you know, this one company has been putting a ton of capital into buying calls, kind of forcing the market higher. And so we'll see how this plays out. Obviously, when these kind of trends reverse, like I said yesterday, they really they can reverse hard, and to the same or a greater extent that they were forcing things up, they can, when they reverse, they can force things down. So we'll see how this plays out. Right now, market's bounced. Right now, support held. Right now, the bull trend in the stock market is intact. And so especially when you have a big sell-off, you shake out weak hands, and then you have a rally back up, especially once you've made new highs, you come down, test that, and then bounce back off. That's a bullish sign. That's not a bearish sign. And so anybody who is hoping for or expecting a retest of, you know, March lows, or, you know, a 50% drawdown in the stock markets, it doesn't look at this point like that's going to happen. It could. I'm completely open to that. I'm watching, making sure that if something like that looks like it's going to happen, I'll be as quick as I can to tell you about it. Right now, looks like the bull trend on the stock market is intact. And two follow-up items. Number one, if you want updates about what is happening throughout the day in financial markets, follow me on Twitter. I tweet all day, every day. Number two, if you want, if you're a reader and you like reading, go ahead and sign up for my free weekly newsletter. I send out an email once a week. It's literally just a few links, 3 or 4 different articles that are really valuable, that I found really valuable throughout the week. I put those together, I curate them, and then I email them out to you every single Friday. And so if you're interested in getting that email every week, it's free. Just go sign up in the link below. And as always, if you like the video, hit that like button and that subscribe button. It really does help out the channel. You guys are the best. Have a great day.